Most contractors assume their insurance policy protects them on every job they take. But the reality is something else determines how that insurance actually works. The contract. Every construction contract contains clauses that directly affect how insurance responds if something goes wrong. And the problem is most contractors never read those clauses closely. They focus on price, they focus on the scope of work, but the legal language in the middle of the contract often determines who carries the financial responsibility when a claim happens. Later in this video, I'm going to show you the clause that quietly moves the most liability between parties on almost every construction project. It is something we review constantly at the office with contractors, and many people do not realize how powerful it is until it's too late. If you work in construction, service contracting, or commercial work, you deal with contracts all the time. Every job comes with some form of agreement. And inside that agreement are sections designed to manage risk across the project. Those sections usually include insurance requirements, but the insurance clause is rarely just one paragraph. Instead, it includes several legal concepts that control how insurance works between the parties involved in the project. When contractors understand these clauses, they can protect their businesses much more effectively. But when the clauses are misunderstood, they can create confusion when a claim occurs. In this video, I want to walk you through 4 of the most important contract clauses that affect your insurance coverage. These clauses appear in contracts all the time. They affect how responsibility moves between the owner, the GC, and the subs. And they play a major role in determining how insurance responds when something goes wrong. So the first clause that appears in many construction contracts is the additional insured requirement. This is one of the most common insurance provisions. We see it all the time in commercial contracts. When a contract requires additional insured status, it means another party will receive protection under your insurance policy for claims related to your work. For example, a GC may require subcontractors to add the GC and property owner as additional insureds on their liability policy. This allows those parties to access protection under the sub's insurance if a claim arises from that sub's work. This structure helps distribute risk across the project. But the wording of the additional insured requirement matters a lot. Contracts often require specific endorsement forms. These endorsements determine how coverage applies to the additional insured party. If the correct endorsement is not provided, the requirement may technically not be satisfied. This is why contractors often work with their insurance agent to confirm that the policy includes the correct endorsements before starting the project. Additional insured clauses are extremely common in construction because they help create multiple layers of protection across the project. The second clause that affects insurance coverage is the Indemnification clause. This clause is one of the most powerful parts of many construction contracts. Indemnification means that one party agrees to protect the other party from certain claims or losses. For example, a subcontractor might agree to indemnify a general contractor for claims that arise from subcontractor's said work, right? In simple terms, that means if the sub's work causes damage or injury, the sub may be responsible for defending the claim or covering the loss. Insurance policies are often used to support these obligations. But not every indemnification obligation is automatically covered by insurance. The language inside the contract matters. Different states also have laws that affect how indemnification clauses can be written or enforced. Because of this, contractors should always understand how indemnification language interacts with their insurance coverage. This clause is one of the main tools used in risk transfer across these construction projects. The third clause that appears in many contracts is called Waiver of Subrogation. This concept that many business owners have never heard of until they see it in a contract. Subrogation is the right of an insurance company to recover money from another party that caused the loss. For example, if an insurance company pays a claim for property damage caused by another party, the insurance company may try to recover those from whoever the responsible party is. A waiver of subrogation means that the insurance company agrees not to pursue that recovery against those parties. Contracts sometimes require contractors to include a waiver of subrogation endorsement in their policy. This prevents the insurance company from seeking reimbursement from specific parties involved in the project. These clauses are often used to reduce conflicts between parties working together on the same job, but they may be supported by the appropriate endorsement in the insurance policy. The fourth clause we see in many contracts involves insurance limits. Contracts often specify the minimum amount of coverage a contractor must carry. For example, a contract might require $2 million in general liability coverage. Some larger projects may even require higher limits than that. These limits exist because construction projects can involve significant financial exposure. If a claim occurs, the project owner wants to know that adequate insurance coverage exists to respond to potential losses. Contractors should always verify that their policy limits meet the requirements outlined in the contract. If the contract requires higher limits than the contractor currently carries, they may need to adjust their coverage before starting the project. This is another example of how contracts and insurance policy must align in order to protect everyone. All four of these clauses exist for the same reason. Construction projects involve multiple parties working together. And whenever multiple parties are involved, there are always potential for disputes if something goes wrong. Contracts attempt to solve those disputes before they happen. They assign responsibilities. They create insurance requirements, and they outline how financial risk will be handled across the project, right? Begin with a plan, right? Insurance policies support those responsibilities by providing financial protection when the claim does happen. But the insurance policy alone does not control the structure of that protection. The contract does. So here's a real-world scenario. Imagine a commercial construction project involving a property owner, a GC, and several subs. During the project, a plumbing issue causes water damage inside the building. Now, several parties are involved in the claim: the owner, the GC, and now the sub responsible for the plumbing work. Because the contract required additional insured status and certain insurance limits, the sub's policy may provide protection for the parties involved in the claim. The contract may also include indemnification language that assigns responsibility to that sub for damages caused by their work. Without these clauses, the situation might lead to lengthy disputes about who is financially responsible for the damage. Instead, the contract structure helps guide how the claim is handled. The final lesson. The biggest takeaway from this discussion is that insurance policies do not exist in isolation. They are part of a larger system that includes contracts and legal responsibilities. The contract clauses determine how risk is shared across the project. Insurance policies provide that financial protection within the structure. When contractors understand how these clauses work, they can make better decisions about the insurance coverage and their contractual obligations. This helps reduce surprises if a claim ever occurs. In the next video, we're going to talk about something contractors ask all the time: why insurance requirements change from job to job. Because one project might require a completely different insurance structure than another. And understanding why that happens can help contractors prepare for those requirements before they sign the contract.